Hello investors and traders, and welcome to the weekly market report, where I'm happy to say we are on backup power, which is enabling me to do this report at all. This is Hurricane Matthew just passing our area, and right down here is where I'm broadcasting from, right down there, and I am keeping an eye on this for our friends up in Jacksonville right now, which are getting hit with the eye wall right about now as I record this report for you. We had another storm in the market as well. This was my market forecast from last week, and although we rallied on Monday a little bit to stay in line with my forecast, we never did get up to the level to fill that gap. Now, that is a warning sign, just like we see the warning signs in the weather. We see warning signs here in the market with this bearish engulfing pattern. I'm going to erase all lines and give you my forecast for next week. If you took a long position from my market report last week, you should not have lost any money because we stayed pretty much the same from last Friday. But this candle pattern right here is a lot different because a bearish engulfing pattern gives us an 80% chance that the market will drop in this direction. So this is going to be my forecast for next week. The secondary signal that supports that bearish engulfing pattern is an increase in selling volume. As you can see here, that volume bar is higher than it was yesterday on Thursday. So all signals are pointing lower at this point for the market, and that's the diamonds. As I move into the spiders, that's ticker symbol SPY, you'll see the same thing played out for the S&P. Rallied a little bit on Monday and Tuesday from the close on Friday, and again, a bearish engulfing pattern on higher volume. So I'm removing all lines here, and I'm going to forecast that we are going to move lower next week, just like that. We do have a support level down here, which we could very well test. So I'll leave that support line in there for you for the S&P. As I move on to the Russell 2000, again, plays out right across the board. Not quite a bearish engulfing pattern, but a big, long red candle with Monday and Tuesday moving up along my trend line that I forecasted quite nicely, but then the market turned on us, just like many times in the past where the signals will shift. And you have to pay attention to those signals, because if you ignore them, it could cost you. The reason I'm pulling this trend line down in this direction for next week is, again, like we saw in the S&P and the diamonds, we had a bearish engulfing pattern, but the Russell 2000 closed. You see the closing prices right here. We closed below that blue line, which represents the 20-period moving average. The Russell 2000 support level is going to be right around 1210, so I'll leave that as support. I don't think we'll hit that line next week to test the support, but I think we'll head towards it. And again, that's my forecast for next week. The Qs, QQQ. I haven't talked about that in a while, but I'd like to do that because the smaller cap stocks are also faced with a bearish engulfing pattern. We hit resistance, and we are starting to turn. The resistance is up here, so we are turning from that resistance right there with that bearish engulfing pattern, and I think that next week we could very well close beneath that 20-period moving average, just like the Russell 2000 has done. Again, that bearish engulfing pattern is supported by higher negative volume, so we have to keep our eyes on that. Volume is the leading indicator. If I look at VIX, which the VIX is also another leading indicator, I said that we would move up. We did Monday and Tuesday. But the good thing for us is that the VIX continues to be a very reliable leading indicator like volume. And so this support level is holding. I think the VIX is going to rally just like that, which, remember, this is a contrarian indicator. If the VIX rallies, the S&P will most likely drop, and we've already talked about that. If you'd like to learn more about what we do at The Market Guys, just go to www.themarketguys.com, and you'll see our front page right there. We have a video link that will bring you to a library of what we call market shots. These are very short videos that show you some of the concepts and strategies that we use. And you would definitely want to learn about the 1% rule. The 1% rule is our mathematical formula. It's pretty simple, that teaches you how to manage risk without taking your whole account and exposing it to a downside pullback. So that's something you want to pay very close attention to. And again, stay tuned to the Market Guys. We have an open house coming up in a few weeks, and we'd love to answer your questions and analyze your stocks. So have a great weekend, and we'll speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.